have been a number of very visible lapses in corporate governance within SA-listed companies. This is concerning. At the same time, the very tough economic conditions are going to tend to bring these kind of things to the fore. We think the cases need to be looked at in isolation. We think it is not appropriate to conclude that corporate governance is lacking as a whole within South Africa. In fact, we think most companies discharge corporate governance quite well. That said, there have been lapses, and in many cases we would argue the lapses have been a consequence of ineffective boards. This is something that we take very seriously at PSG. We consider management teams and the board of directors to be custodians of our clients' capital. And if they are not discharging their responsibility in that regard, we need to hold them to account. So what do we do? The first thing we do is we engage in a proactive fashion in terms of making sure that management teams and boards of directors do discharge their responsibilities. In some cases, we've had some very proactive interventions where we have strongly encouraged boards and management teams to improve their levels of corporate governance. And with all of our companies, this is an ongoing exercise. From an investment perspective, any investment decision that we're making, corporate governance is a very important consideration in terms of what a company is worth. And if we consider corporate governance to be below par in any particular area, we need to consider whether that could materially impact our assessment of what the company is worth. There are numerous examples of companies that have failed to convince us that lapses or potential weaknesses in corporate governance is more than compensated for in share price. And we've been prepared to sit on the sidelines and not invest on our clients' behalf. One of the things I think we need to consider is that the current concern around corporate governance, the very bad headlines that we're reading, is one that speaks to a witch hunt in this area. And we think there's a high possibility that mispricings will occur as a consequence of people assuming that corporate governance is poor and assuming that management teams will materially erode shareholder value. In the cases where that proves not to be the case, we want to exploit the mispricing on behalf of our clients. Sure, we need to ensure that corporate governance is adequate, and most importantly, we need to ensure that balance sheets are strong enough to withstand these tough economic conditions. So we take corporate governance seriously. We engage actively with the companies that we're invested in. But if the company meets our requirements for investment and the difference between what we think the company is worth and where it's trading is wide, you can expect us to be investing on our clients' behalf.